and this is going to be a fun panel. We've had a chance to talk a couple of times over the last few weeks getting ready for this. One of the things all three of us agreed upon is that this panel, which we've done, I know you and I, Hunter, we've done this 3 years now in a row, and it's always a fun panel if people submit questions. So there are some people around the room who have cards. If you have a question for Hunter or Chris, let it know. Fill out a card. They'll send it up here, and I'll ask your question to these guys. We've got plenty of topics that we're going to go over, but we often find that the best questions come from you guys. So do not hesitate. Fill out a question card now, and we'll start getting to some of those questions as we go through the whole session. But let's start first off with one of the things that I think a lot of people, investors, are wondering about because they hear about it on a regular basis, at least over the last several quarters. What's happening with PRASM, and when is it going to finally turn positive or at least bottom out for the airlines?
Yeah, sure. I'll start. It sounds like PRASM at a U.S. airline aggregate level is probably not going to be positive until back half of next year in terms of a year-over-year change basis.
And it keeps getting pushed further out, it seems as though.
Yeah, it's a deep hole, man, and V-shaped recoveries in life are rare. A lot of investors see these comparisons and they get tricked into thinking that that means it's going to be better, but it's not. PRASM will only get better when capacity slows or pricing goes higher, and neither one of those is really happening in volume right now. So second derivative rate of change is getting better. As you said, when is it bottom? It's already bottomed, I think. I think fourth quarter will be slightly better. You know, as long as margins are as high as they are, the airlines are going to be a little bit hesitant to pull capacity out, and that's really what's going to get PRASM higher. So it's probably not going to be until back half of next year.
Well, and Hunter will talk about this, but the question is it relevant? And it's not relevant if oil keeps doing what it's doing today, what it's done the past week, and it's going back down. IEA released a report this morning softening up their demand expectations for 2017, and so it looks like the oil market's going to probably have a little bit of trouble coming into balance the back half of this year and early into next year. And so, you know, for all intents and purposes, it doesn't look like oil's going back up to $60, $70, $80 a barrel. And so, you know, it might not matter all that much. You know, if they can get back to flat PRASM or even down 1%, margins and free cash flow are still going to be historically high.
But at the same time, it is the perception amongst investors that you need to have at least flat PRASM, if not positive PRASM. So while you say it won't matter, and certainly they're going to be making healthy profits, nobody's disputing that. How do you get the investor interested in the airline stocks if you're looking at negative PRASM at least into the back half of next year?
Well, because if you're patient and if you're a long-term investor, so we've been invested in this space since July of 2008 and have seen a lot of different cycles, oil up, oil down, PRASM up, now PRASM down. But the capital allocation is the key to the investing game, you know, quote unquote game. So these companies, American, United, Delta, even Southwest, they're returning capital to shareholders. And so what happens if you're patient, if you've got more than a quarter or 1 year time horizon, these things just get wound up. And so if PRASM comes back, fuel doesn't go to 100, you know, the impact is going to be even greater. You know, Americans taken out, what, 38% of their share count over the past 2 years? That's ridiculous. So we can wait for that. It's going to make the upside even more pronounced, in the stocks at least.
Do you think, Hunter, that we've seen, I mean, let's think back to a couple of years ago when you really saw the airline stocks take off and surprised a lot of people that they had the momentum to continue moving higher. The profit growth surprised many people, and the stocks really took off. Do you think we have another one of those runs in us?
Yeah, I do, honestly. I mean, the valuations have just imploded across the sector, as Chris said. I mean, American last year, I think, had a 50% improvement in pre-tax income. Share count was down 20%, and the stock was down 40%. I mean, it's just mind-boggling, which means that when your earnings are up 50%, your stock is down 40%, that means it's entirely driven by the earnings multiple at which the market is valuing the company. So investors don't like airlines making money, per se. They like airlines making money the right way, you know, which is pricing. And the reason why airlines have been historically such bad investments, and the reason why people care about PRASM is because it's a proxy for pricing power. And unlike better industries, airlines have never held pricing power through a cycle. You know, it's always bankruptcies or whatever. They've never held pricing power through a cycle. So the airline executives get all upset about talking about PRASM, but in reality, if you think about PRASM in the context of pricing power, it makes a whole lot more sense. So, look, bottom line is though, Phil, I mean, margins are now starting to come down on a year-over-year basis. If oil takes another leg down to $30, and forget it again, it's probably another extended period of time
Right.
of low valuation, but margins are now starting to compress. And as that happens, RASM net of fuel will go negative. And airlines will therefore see their incremental capacity additions result in decremental margins or losses, and they will take that marginal capacity out and sort of orchestrate a soft landing into a normalized margin environment, which will result probably in better valuations and better
You think there
pricing.
can be a soft landing?
Yeah, I think they will. Everybody always wants soft landings, and it's happening slowly and gradually as it does. But again, that marginal capacity is now not as profitable as it was, so the capacity has to come out. And when that happens, PRASM will get better, and then valuations will improve, and there'll be another run in the stocks. Whether that's 6 weeks or 6 months, I don't know. Well, it's not 6 weeks, I do know that. But
Right.
it's probably longer than that.
Just a reminder, if you have a question, feel free to fill out one of the cards. There she is. She's got a stack of them, and they'll bring them up here at some point, and these guys will be happy to take your question. Let's talk about something that Holly made reference to, the musical chairs in the executive suites, most noticeably with Scott Kirby going to United Airlines. How much does, not just his moving to United, but potentially other executives as they have risen to new positions within the different airlines, how much does that change the equation, so to speak, in terms of how these airlines operate, from your perspective, Chris?
So as a big United Airlines investor, I'm as happy as I can possibly be about Scott Kirby coming to United Airlines. As I said, we've owned United in particular since 2008, and so we've been through 2 or 3 different iterations of management. And if you kind of rewind the clock 2 months, actually not even that, it was probably 6 weeks, we had Oscar in our office in Denver. And since then, he's completely changed the C-suite at United Airlines with Andrew Levy, Julia Haywood, and now Scott Kirby. And so all of a sudden, you have this all-star team of managers on the finance side, on the network side, and then you've got Oscar, who's doing an amazing job with the culture of the airline and with labor relations. It's really powerful. The question for United is, can they close the margin gap with their peers, which is pretty wide, 400 basis points plus. I don't know. The new management team seems to suggest they can, and they can actually do better. All I know is they need to get partway there for us to make money as investors in the stock. So I think it's great. I think he's gonna refresh kind of the culture on the revenue management side, and the mentality of the airline is going from a very defensive posture to a very offensive posture in all facets. And that doesn't mean, the big worry I think for us was, we thought that means they were going to flood the market with capacity. It turns out that's not going to be the case at all. At least that's my understanding. And so that's refreshing. So I think it's set up extremely well.
Hunter?
Yeah, I mean, there's actually, I'll take the American side of it too. I think I agree with everything Chris said about United. Look, these guys are all smart guys, but when you become part of an institution for a very long time, you kind of just have like a set way of thinking. And it's not so much like groupthink, it's just sort of this like institutionalized, like this is just the way we do things, And Scott is an extremely strong personality, and I don't know the inner workings of the American Revenue Management Department, but I would imagine that there probably wasn't an enormously amount of sort of democratic process in terms of like dictating strategy. So that wasn't a joke. So in terms of like, just sort of the potential for collaboration at American, I think is improved. And then Scott's going to go over to United, where he's going to be working with new people that are smart people. I think they're going to take a data-driven approach. It's not going to be an emotional sort of gut thing. There's a situation here where this could be productive, really not just for United, but also for American as well, if they take advantage of the change, because let's be honest, I mean, airlines have done nothing but just destroy capital and lose investors' money with the current way of doing things for the last 18 months. So obviously, some sort of change in strategy is needed.
What change would you want to see right now?
Me?
If any executive brought you in and said, please give me some insight into what you would change in our strategy. And I know each airline has different things specific to them, But if you could, in a generally say,
If I was running an airline, man, they would be bankrupt in like a year probably.
there you
There's a
go.
reason why I talk about airlines and don't actually work for one, because I don't know what the hell I'm doing working for an airline probably. But at a high level, the industry needs to fix itself in aggregate. It's not really incumbent on one or two airlines to take the initiative, because United, for example, has been disciplined on capacity for the last 2 or 3 years, and they've done nothing but lose market share. You know, if all the other airlines had behaved like United, stock prices would be a lot higher. You know, so I mean, I would probably argue forcefully to the network airlines to stop matching ultra low cost carriers at the exact same price points, because the products are better in every sense of the word. The network is better, the product is better. It's a better brand, it's a better network. Customers should have to pay a premium to be on it. That's how United and Delta seem to feel. It's not how American has seemingly felt over the last 18 months. So the first thing I always do is instill a little bit more discipline around segmenting customers and focus on which customers really butter my bread and catering to them, and just turning some of the lower garbage customers at the bottom end that are not going to make me any money in the long run.
but they don't seem to be able to do that, do they, Chris?
They don't seem to be able to do it, but we don't, you know, they'll figure it out. I mean, if you look at what the industry's done over the past 8 years, which is my only frame of reference, it's night and day. I mean, we used to beg them to talk about return on invested capital.
Yeah, sure.
And now that's what they compete on. That was like 3 or 4 years ago, very recent. I remember when Delta first rolled out their, whatever they called it, the capital allocation day or something like that in New York, and they started a dividend and bought back stock. And that was like the holy grail as an airline investor. And I mean, the stocks have done well since then, but probably not what they should have done. So, you know, I'm pretty confident that the management teams are taking the right approach. They definitely can make some tweaks around the edges, specifically in the short term, I think, to boost you know, the bearish investors' confidence. But again, if they come through you know, this soft patch with pricing, with the global economy, and margins are down just a little bit, but you know, don't go to zero like they have every past cycle, you know, there's no reason you shouldn't pay 10, 12 times for these types of companies, which for a lot of these stocks means it's a double. And that also assumes they're not buying back stock from here to there, which, as I said, just kind of winds it up a little bit more. So, you know, I'm concerned. Hunter gets a little more concerned than I get. But, you know, we're patient, and patience has worked out for us, you know, for a while. So, you know, we'll wait. We'll wait for somebody to pay us 8 times for our United stock rather than 6 times.
I have a question here. We'll start with you, Chris, and then Hunter, you can jump in at the end here. How does Wall Street regard airline stock buybacks versus investments in product improvement when it comes to evaluating the overall financial health of the airlines?
Well, I mean, it's extremely subjective to value the, you know, refresh seating in a United 737 or something. So as a customer, I love it. You know, I want the product to be just as good as everybody else. I want the planes to be on time. I want good food served on the plane. But at the end of the day, every investment they make, and they've got better data than we'll ever have, they have to at least earn their cost of capital. You know, and some of them will argue it's whatever, sub 10%. You know, forget about it. You go through a whole you know, cycle of the stock market, and they need to at least get 10 to 12% on every single dollar they put back in this business. Otherwise, they just have no business putting money back into the business. That's capitalism. And that's been the problem with the industry. Now they can afford to do that, and they're making some of those upgrades. So, you know, generally, a blanket statement, I would prefer some capital get returned back to the investor, but at the same time, the industry's been starved for so long. We also understand there's a lot of upgrades that have to take place to just improve the customer experience and keep, you know, the new entrants from coming in with new fresh planes, new labor, all that stuff, and competing away some of the profits. So it's a long-winded, non-technical answer on what I would prefer.
Yeah, no, I agree. It's a balance, you know. I mean, you don't always have to buy back stock, but you certainly have to invest in your product over time, particularly if your competitors are doing it, which is obviously happening. There's a bit of an arms race as it relates to, you know, premium seating and in-flight entertainment and stuff like that. And if you don't do that, obviously you're not going to be around for very long. But when the valuations come in, these stocks are trading at, on a PE basis, like 5-6 times fully taxed earnings in a year out, and you've got an extra $1 billion lying around because the Saudis are fighting for market share, you buy back stock. You know, I mean, the return on that investment immediately is enormous, and certainly over the long run. But it's a balance, you know. It's like saying, what do you do? Do you eat lunch or dinner? You got to do both. I mean, obviously, it's you got to find that right mix. But I think buybacks should ramp in situations exactly like we've just seen, where there's extra incremental cash flow and the valuations have come in. You spend that incremental dollar on buying back stock.
Well, let's talk about the one area where I think everybody would agree they would love to see the airlines make the investments and make them in a fashion that would eliminate the IT issues, which seems to be the crazy uncle under the stairs who rears his head every 3 to 4 months. There is a massive outage to one of the carriers, and I hear from people all the time after we do a story, and they will say, what's with this industry? Why is it that these guys continually say, we've got an outage?
It's funny to me that people wonder that when the industry hasn't made any money for 30 years. I don't understand what people want them to do. I'm not a technically savvy person. I just learned how to download podcasts on my iPhone about 2 weeks ago. But when you talk to the big airlines, it's not as easy as shutting down the system, switching to a new system the next day and turning on the lights. Like, it just does not work like that. It's going to be patchwork. I don't know what the solution is, but let me offer the positive side of it, which Oscar Munoz offered to us, and that's the fact that it would be very hard for a terrorist to go in and hack United's system because it's so old, like you just cannot get into it.
Yeah, there you go.
So
Perfect.
think about that.
I like that.
There's pluses.
Yeah, I mean, at the end of the day, these types of projects are discretionary CapEx, really, and you know, over time, as you know, airlines don't generate free cash flow in the long run. They haven't. So if you don't have that incremental free cash to generate, to spend on IT projects, it's going to get punted. And more importantly, there's not a lot of vendors out there that are willing to sell these products that are efficient, proven, cost-effective systems because they're not going to invest hundreds of millions of dollars in their own products to sell to the airlines where they're not sure if that customer is going to be around to buy it in 5 years. So there's, it's sort of a trickle-down effect in terms of the people that sell into the industry haven't innovated to offer the airlines that's really anything that's very good. You know what I mean?
So from the consumer perspective, is this one of those situations where you hope it doesn't happen, but we should not be surprised if every 4 to 6 months there is some type of an outage? Maybe not a massive one, but there's some type of an outage that's going to hit one of the airlines.
I don't know if it's 4 to 6 months. I think it's just very crystallized in our minds because it seems to happen frequently lately. Maybe one every year, and maybe not as big as the incident that Delta just had. But you know, statistically, it's probably reasonable to expect that.
Yeah, it happens, man.
That should be a marketing line. It happens, man.
It happens, man.
Here's one for you, Hunter. Airline alliances and antitrust immunity are restricting international competition. Do you think real competition will come back to the international marketplace?
Well,
This is not a Norwegian customer.
Loaded. I guess now I know these executives yell at me for asking loaded questions. I guess I get that now. I think that that's statistically inaccurate. I think you would see that international pricing is a disaster right now, and the transatlantic in particular, where
Terrible.
These ATIs have resulted in a dominant share of 85% of the market being controlled by 3 entities. Well, guess what? When 2 airlines have antitrust immunity, they're still competing for each other. You have the ability to collaborate with these foreign flag carriers, but you're still competing for the revenue when you have antitrust immunity. Now, a JV structure with revenue sharing is a little bit different, but those are pretty limited in the scope on a global basis. There's none in Latin America. There's hardly any outside of Japan. So when you have antitrust immunity, you can sit there and say, you do the 6 p.m., I'll do the 7 p.m., let's set fares at $300, but if people start taking the 6 p.m., that other airline's going to get a little bit antsy and go back and say, this is not working for us. They're still competing. There's a back room where people are smoking Cuban cigars, like laughing at like the little person and how to conspire against them. I mean, the data doesn't support the fact that there's still an immense amount of competition in the international markets. ATI is, I don't want to say it's worthless, but it's done hardly anything for investors, let's put it that way. And it also opens up connecting itineraries beyond markets where the customers would normally be able to get to without it.
Chris, question for you. How does Wall Street view the future of fuel hedging given the losses some of the airlines have had in recent years?
So Kirby moving to United pretty much makes it a moot point at United going forward. And Andrew Levy agrees with that philosophy as well. So it's dead at American is my understanding. It's dead probably for all intents and purposes dead at United. Delta seems to have backed off of it quite a bit. So my guess is it's, at least in the near future dead at Delta. Southwest still seems to hedge quite a bit. So it seems to have gone away, which I think is a good thing. For the discipline, the competitive nature piece of it, but then just also from the fact that, anytime you're paying for some kind of derivative or futures contract, all you're doing is sticking money into, the bank's pockets, which they seem to have plenty of money. But, we'll see. It's convenient to walk away from it now. We'll see what happens if oil goes from 50 to 100.
They'll be back.
They'll be back.
It's a joke. Hedging is a joke. It's not hedging, it's gambling. We shouldn't even call it hedging. We should call it betting and gambling because they're not doing it systematically. They're trying to time the market. And when oil goes down, they buy more. That's a bet. That's a gamble. And they try and do it for the wrong reasons, too. They do it to try and get a temporary pricing advantage so they can take market share. They don't do it to hedge risk. That's crap. That's what they tell people. It's not true. And they gamble shareholders' money with it. And I was trying to tell them, hey, guys, if hedging made money for you in the long run, Goldman would not be your counterparty. I assure you that, okay? As soon as hedging starts to make money for airlines in the long run, Goldman's gone. But as long as Goldman's willing to take their side of that bet, airlines will lose in the long run every time. Every time.
Another one for you, Hunter. Do current multiples adequately discount event risk?
Yeah, I think current multiples discount a whole lot of risk, actually. I mean, these stocks are trading at 5 to 6 times PEs, which is among the lowest PE multiples you'll see out there in any industry in the S&P 500, certainly. So it's discounting a whole lot of stuff. But even when times were great, in 12, 13, 14, the stocks capped out at 10 times earnings in general, when the S&P 500 is trading at 15 times earnings. So there's a 5-turn discount even when times are fantastic. Discount things like terrorism and global shock to the system and stuff like that. So there's a perpetual discount embedded in these stocks for event risk.
We've had a lot of events, though.
Yeah.
There's been a lot of stuff going on around the world.
Appropriately so, yeah, exactly.
So the industry's handled the events well.
Got a few last minutes. If anybody has a question, now's the time to fill it out. One of my favorite topics every year to bring up to Hunter, but I'll start first with you, Chris, is the flight experience. We all do a fair amount of flying. All of us in this room do a fair amount of flying with almost every airline, all the majors out there. How do you feel about where the flight experience is right now?
I feel like it's getting better. Again, using United as the most recent example, just had their best summer on-time performance, operational performance, I think, in the history, at least since the merger, potentially in the history of the airline. I think the food is a lot better. So the onboard product, the boarding process seems to get better. I think it's getting better. It is key to have some element of status when you're flying, even if it's some of the lowest rungs of status, but you got to get in lane 1, lane 2. You got to be able to put your bag in the overhead bin. It helps to have the extra 5 inches of pitch or whatever it is in the seat. But generally, it's I think it's getting quite a bit better. I do a lot of Denver, New York, Denver, Houston, and things are pretty smooth right now, other than LaGuardia.
Yeah, it's fine. I think it's fine. I agree.
That's the shortest answer I've ever heard from you on this question.
United took away my roast beef horseradish sandwich, which I'm pretty disappointed about.
What about the new seating options that are being offered, particularly?
That was really good. I would not eat in the airport to wait for that.
Okay.
It's gone now. Doesn't matter.
The new seating options that are going to be rolling out, whether it's Polaris with United or the different options that are going to be coming into the market. A difference maker for the airlines from your perspective?
Yeah, I mean, look, air travel is generally commoditized with the exception of about 13% of each network airline's passengers. Those are generally not commoditized customers. They choose based on schedule. They choose based on really brand or status or something or corporate arrangement they have. But they don't buy that product because it's commoditized like they do in the back of the plane for close to 90% of the other passengers. So you got to keep up with that stuff, and Airlines are constantly innovating. It gets back to the question about like spending money on in-flight improvements. It kind of has to be done. Let's put it this way. Whoops. I didn't adjust my model when United rolled out Polaris.
Right.
Okay.
You looked at it as cost of business. You have to do this.
Yeah, it's not like, oh, this is worth $30 million. No, it's like, okay, that's good. We'll see. I didn't adjust my model. Stock didn't move on it.
A couple last questions here. Several airlines, Chris, have recently signed expensive union agreements. Can the industry afford the higher costs?
They can right now. Question is, can they 2 years from now? Yeah, again, it's a cost of doing business, I guess. You know, some of the catch-up that the industry's had to do on the product, on labor, you know, these are ultimately good things for us as customers, for labor as employees, maybe not so much as an investor at this stage of the game, but, you know, it's a necessary part of the business, and that's the beauty of, you know, having a 20% return on capital. It's the beauty of having $2 billion of free cash flow. You can make, you know, you can make all parties whole at the end of the day. This is, you know, not a lose-lose or a win-lose situation. So, you know, it's hard as an investor because you always hold your breath wondering how much they're going to pay, but you know, as long as the culture gets better and the business continues to improve and move forward, it's a good thing at the end of the day.
Hunter?
Yeah, it's good. I mean, look, it's good for this country. It's good for the jobs. I mean, I keep seeing these things invented that like are going to make humans not needed on so many, like we were saying before about driverless cars and Uber. Like, it's not good in the long term for employment in this country.
We won't see driverless or pilotless planes.
Yeah, we're not going to see that. So, you know, if a pilot can make $275,000 and spend his money on a few vacations or her money, that's great. But I haven't seen any contracts that have been granted over the last couple of years in this sort of like upcycle that I viewed, except for maybe like one or two that I viewed as just like over the top wasteful. And if they can come with like longer term productivity enhancements and things like that, that's good. But so far, I think it's been okay. As Chris said, like we'll find out
Everybody's
over time if this is affordable or not.
Everybody's just been starved for so long, and we're all getting a little bit of it back. It's a good thing. It's a good thing.
Last question, and we'll start with you, Chris. Give me some perspective on where you think this industry will be as an investment a year from now. Will we look back and say, well, you know what, it wasn't a bad time to get in the airlines when you were doing it back in the third quarter of 2016?
Yeah, I mean, yeah, I mean, we've got our wagers made at Janus, and so yeah, we think it's a good time to be invested for sure, for a number of different reasons, but mostly because we're going through another proving cycle. Are the airlines going to lose it? Are they going to just flush money down the toilet? And they don't seem to be doing that. And so we're going to come out of this, and the hurdles are not high to make money in this space. Profits can come down a little bit, margins can get squeezed a little bit, and you can still go from 6 to 7 to 8, God forbid a 10 times earnings multiple on these stocks, and you've just made quite a bit of money. So I think it's a good setup. You know, I'd probably want to stretch it out beyond a year just because we're longer term investors. But you know, I hope we make some money over the next year.
Yeah, well, I suppose I see a camera though, so we'll be able to tell if this is right or wrong. But I agree. Go on record and say I agree. I think stocks are going higher. Like you said, it's a long, slow crawl out of the hole of PRASM. But as long as these incremental margins are negative, which they are now, like they're saying, eroding year on year, that's good. Investors don't want to see margins that are too high because it's going to be viewed as unsustainable. And a lot of people go and they short those stocks because they know the trajectory of earnings is down. So it's just better to get let's just say aggregate margins down from 17% to 13%. Let's just get there and sustain. And I think that's what you're going to see.
And if they sustain, then you look maybe 18 months out and think that it's a pretty good runway for the airline stocks to move higher.
Yeah, look, capacity will find an equilibrium with price, as it always does. It's like a sine-cosine curve, right? Like it will find an equilibrium, and year upon year of 2-year declines in PRASM on declines in PRASM will have a compounding effect on that incremental revenue, and capacity will come out. These airlines are not going to run their businesses with a perpetual state of margin decline. They're not going to do it this time. So I think we're already seeing the benefits of capacity coming out, which is going to directly result in improved perceived pricing power, which is directly going to result in a re-rating of the multiples. So I think they will be higher 12 to 18 months from now, they'll be higher 6 months from now. As
All
long
right,
as
we
this
got you on
continues.
camera, too.
Yeah.
Hunter Keay, Chris Kelley, thank you very much. Good.